Good thing it's a Friday. It's been a decent week. We haven't had a huge amount of trades, but trades we have had have been, pretty decent altogether. It's a very quiet market globally as far as the stock markets go. All the global markets are down just slightly. If you go over here to Yahoo Finance and just kind of go down the listing of all the different futures. Dow futures are just barely in the red, not too bad. You got the European markets down just about 0.5%. Again, not that big of a deal. And you can see it's been, slightly down after a big up day, kind of a big up week here across the board in Asia. So, I mean, we're looking at just a slightly down market, but we're not looking at a whole lot of volatility for today. It's also a quiet news day. CAD had some bad manufacturing sales number, but that really didn't affect it. It brought the CAD up a little bit, but brought the CAD down a bit. CAD's more correlating to oil prices, so I'm not too concerned with that. In fact, I'm looking to go long Canadian here was one of our trading scenarios. And then we have the University of Michigan Consumer Sentiment Report coming at 10 a.m., but I mean that's not a big mover of the markets. So looking at this, there's really only a couple of opportunities that I like today. For one thing, we've had a nice little ABC here on the Canadian. This was driven up here off the bad manufacturing numbers. And plus oil was down and is down 2%, but everything seems to be climbing back in here. Looking at this kind of you don't really have to go with the 100% retracement on this individual trade. I'm looking at this 78.6 level here, and just like we've kind of been doing, using a little bit more added confirmation, you can see as it's coming up, really it hasn't made, it's kind of been sidling out. There's a little bit of a divergence in this uptrend on the LP trend line to where it's going sideways on the LP trend line as it was making higher highs, showing that we don't have a huge amount of sellers on dollar or buyers on dollar Canadian right now. So a sell entry closed below the 78.6, and all we really need, it's already gone just barely to the +5 level and negative on the 1 hour totals would be enough to get me into this one. And then as far as our stop order goes, put a stop right up above this swing high. I would just put your stop. You can actually put your stop up above the 100% retracement level, which is 1.28962. I would put your stop just above the 2900 level. That's really where you want it. That's where the resistance is. So I would put it at like stop 1.29010. We'll just put it like a pip above the 2900 level. That would also be above the 100% retracement. And then on this one, since it wouldn't be a huge amount of risk, I think you can shoot for a limit of 1 to 1.5 risk reward. And again, if you can do more than one lot, if you can split your trade in half, you want to take your first lot off at a 1 to 1 risk reward, and then take your second lot off, move your stop to break even, and take your second lot off at a 1 to 1.5. But all things considering, Canadian is one that's actually been one of the stronger currencies as of late, so that's not a bad play at all to trade to go short on dollar CAD. I know it's had some bad news this morning, but it's really not that, it's going to correlate with oil prices, and if oil prices are already down 2% and coming down to that 40 level, and if that 40 level holds and oil prices bounce back up a little bit, then we should be good to go when it comes to that trade. So we're going to sell this into a retracement. We like retracement trades. And we are good to go on that. So I would wait until after 9:30 though. That's why I say close below, because you're going to look for that 10 o'clock bar to close below. You want to use a little bit more added confirmation on this. And as far as long dollar trades, There's a couple that I like on long dollar trades. Let me switch this one back over to the euro dollar up in here. Euro dollar, we all know, broke down out of consolidation overnight. I'm not overnight, this week. Here, I'll bring it up for you. This long-term consolidation that it had finally broke down. We were looking for retracements on this yesterday. It's formed a little intraday trend line in here, but it's still in more consolidation mode. Between the euro dollar and the dollar Swiss, I think the better play today between these are two highly correlated currencies. It's actually not a negative correlation, it's a positive correlation, because as the euro gets strong, the Swiss gets strong, and as the euro gets weak, the Swiss gets weak. Some people would call that a negative correlation, but it's actually not. It's a negative correlation just because of the fact that it's more of a negative correlation because of the fact that it's the dollar's the quote currency on one and the base currency on the other. But if you're looking at just technical price action, I guess you could call it a negative correlation. Fundamentally, it's a positive correlation. Anyway, I digress. I kind of like the formation here on the dollar Swiss a little bit better than the euro, because the dollar Swiss has not been making any, it hasn't been consolidating as much. In fact, most of you, if you follow chart patterns at all, would say this looks kind of like an ascending triangle, like right in through here with this ascending, we got a slightly upward sloping neck of trend line, and then we also have this line of resistance right in through here. Dollar Swiss is already showing a +5. We already have the LP trend line trading in that direction. On dollar Swiss, I'd like the opportunity, and this is just like going short the euro dollar pair, folks. I mean, going long dollar Swiss or short euro dollar, they're going to be highly correlated to one another. So a buy entry, we're going to look for a close above resistance. I wouldn't worry too much about the 9,700 level and a +5 on the 1 hour totals, which it's already +5. All you need to do is look for that close. That's a nice little technical pattern there, ascending triangle. Technically, in pattern trading, an ascending triangle would be considered a continuation pattern. Some people call it a consolidation pattern, but it's actually more of a continuation pattern, to where if you're making a set of higher lows and you have a horizontal resistance level, a break through this resistance level would signify a continuation of trend. The good thing here is you would not have to put your stop too far away. We have the higher low here. We have the higher low here. I think all you would need to do is put your stop right below this swing low right in through here, which is 0.96, let's see, 0.96599. 0.96599. And this is another one to where I think the resistance being found here is just below it's just below the 9,700 level. But I think if it breaks out above here, I think this is where the line of resistance is. So 9,700, that psychological level, if you will, I'm not too concerned about it. And this is another one where you could do a limit of 1 to 1.5 risk reward, and I think you'd be in pretty good shape, because if it breaks out to the top side, not only would it be a break of the pattern, it would be a break of consolidation. It would be like a rubber, a tightening of the rubber band and breaking out there. And once again, if you can split this up into two trades, two lots, you could do limit 1 at a 1-to-1 risk reward, take that off the table, and then do a limit 2 of 1 to 1.5. These aren't big, neither of these are going to be big, big profit trades, but remember, it's Friday and you're not seeing a huge amount of volatility in stocks, and a lot of times volatility is just kind of a holistic thing in the markets because the synergy exists in the market, so we're not looking for huge profits on these trades, but it's enough to get us through what might be kind of a lack of volatility today. And there's one more dollar strength trade that I think we can consider. And I'm actually going to call this an ascending triangle. or you can call it consolidation. Here we go. And if we are looking to trade in either direction today, there we go. This is 1, 2, 3 bounces from this trend line right up in here on the pound. This is another one. This is going to be just a 1-to-1 risk reward trade. You can see the pound has been making higher highs right down in here, but it hasn't really broken. You know, this was actually diverging as it was coming up and retracing. So on the pound, what we'd be looking for is I want to see a close below trend line, and all we need is a negative on the 1 hour totals, because the pound has been built up so much. All we do need is 1 hour totals to go negative. And remember, if we get the 1 hour totals going +5, if they go negative, you're still seeing like a 5% shift in the imbalances. So instead of just going +5, -5, as we've done in the past for more confirmation, all we're doing here is just saying, okay, well, you know, it's going to make us, if it makes a huge shift in the imbalances, we still want to be able to get out. And then where is that 41484? You know, I would just put my stop right up above this swing high, like 41926. I don't think you even have to put it above the 4200 level. 1.41926. So right up above this high. Not necessary to go too outside there, because if the pound's going to go down, it's going to go down. And then for this one, this would just be a 1-to-1 risk reward ratio, because you're trying to hit this as it gets down to that lower edge of the 4100 level. There we go. And I would kind of treat the pound and the Swiss as kind of a one cancels other order. What I mean by that, if the Swiss executes first, go with the pound. Or if the Swiss executes first, go with the Swiss. If the pound executes first, go with the pound. No need to double up on any risk today. You probably don't need me to repeat that, because, you know, same thing I say almost every Friday is it's been a pretty solid week this week, you know, from a trading standpoint. So no need to, you know, just to take unnecessary risks on a day like today. Actually, I'm just going to go ahead and I'll shift this over. So just keeping it simple, dollar strength, dollar weakness. I'm going to go ahead and save this. Share it with you. So there is your handout. For 15.16. Those are the only ones I'm going to look at today. We always have our Friday theme, which is don't overdo things. You know, it's been a good week, so no need to take unnecessary risk in the market on a Friday, especially when the markets are not signaling any type of higher volatility. So we see what the euro is doing here. Swiss still hanging there. Again, you want to wait until 10 o'clock to make any type of move here. At the very least, you want to wait till 10 o'clock. You don't want to, you certainly do not want to, just get in off just the PitView indicators or anything along those lines, because we're going to need some added confirmation here when it comes to the trading opportunities for the day. So CAD is starting to come down a bit. Currency characteristics already done, actually. I'll send out an email with the updated YouTube links. I did them outside of the normal times yesterday when I got my webcam back. So actually all the tutorials for the week are done. They're thinking ahead for you. I got the webcam finally yesterday after the afternoon class, and I was all hyper, so I went ahead and just recorded them on through, all the 15-minute classes. So I already have them done. I just need to upload them to YouTube. I got that situation fixed, and you should have about 3 or 4 new classes in the resource room here by this afternoon. So yeah, currency characteristics, the Nuri FX tutorials, they are done for the week. I kind of got a head start on them a little bit yesterday because I had missed we didn't do the 10:30 classes yesterday because I broke my webcam. So got the webcam back and was bored yesterday afternoon, so I just went ahead and went full steam ahead and already recorded those. So all the tutorials are done for the week, which is a good thing because I've got to run out and I'll just say I need to run an important errand, which is very time sensitive. It involves smuggling. I'm just kidding. So there, I know we've gone for about 18-20 minutes here. Truth be told, it was gonna be a short class today anyway, because I really, those two scenarios are really the only ones that I like today. This is the kind of day where it's okay to wait until Monday and put the close sign on the business. I'm 2 losers this week, both on Aussie actually, and then I believe 4 winners this week. So it hasn't been too bad. I didn't take the only one that could have executed yesterday, by the way, was here on the dollar yen. And if you would have taken that, you would have actually hit a max profit if it broke through that, if you got the break there. So that's really been the only trade from yesterday. But other than that, from Monday, Tuesday, and Wednesday, we've actually done pretty well this week. And whenever I do pretty well for a week, I prefer to lock in those profits and not take any type of unnecessary whipsaw risks in the market on a Friday. So you have your handout for the day. I'm only going to be gone for about an hour, so if you do have any questions, shoot me an email. Actually, maybe more like 2 hours I'll be gone. I forgot I got to go all the way west side. So if you do have any questions, shoot me an email. I'm more than happy to answer them. And then I'll see you bright and early on Monday morning. Have a fantastic weekend. And let me know if you have any questions. So thanks for coming in, everybody. Bye-bye.